Imagine borrowing the modern equivalent of over $800 million to build the most ambitious, gravity-defying project in the history of the world. You pour everything you have into it. You hire thousands of workers. You move literal mountains of steel and stone. And when you finally open the doors expecting a massive crowd of paying customers, absolutely nobody shows up. Your peers quietly pity you. The media openly mocks you. You are losing a staggering amount of money every single day, and the entire world is watching you fail. Most people in this situation would declare bankruptcy, cut their losses, and walk away in shame. But the investors behind this project refused to surrender. They held on to their empty, money-bleeding asset through the absolute worst economic collapse the world had ever seen. And what happened next will completely change how you think about risk, patience, and the true cost of building generational wealth. The story begins during a period of massive economic euphoria. It was a time when the stock market was only going up, everybody thought they were a financial genius, and borrowing money was incredibly easy. Two incredibly wealthy men decided they wanted to dominate the New York skyline. They weren't just building a tower for the sake of art. This was a ruthless real estate speculation. The plan was to build a financial machine, an asset so massive and desirable that it would effortlessly print rent money from thousands of corporate tenants. They bought a prime piece of land, drew up the blueprints, and prepared to construct the tallest building on planet Earth. But investing has a funny way of punishing arrogance. Just as they started clearing the ground to lay the foundation, the stock market completely imploded. The global economy went into a terrifying freefall, kicking off the Great Depression. Overnight, the money dried up. Businesses weren't expanding into shiny new offices. They were firing their employees and boarding up their windows. Put yourself in the shoes of these investors. You have just taken on a colossal amount of debt. The economy is collapsing around you. You are staring at a massive, incredibly expensive hole in the ground. What do? In finance, there is a dangerous psychological trap called a sunk cost. This happens when you have already spent so much money, time, or energy on a bad idea that you feel forced to keep going, simply because it hurts too much to admit you were wrong. Today, a modern committee of corporate analysts would have immediately panicked, paused construction, and tried to sell the land for pennies on the dollar. But these investors made a deeply controversial choice. They doubled down. They firmly believed in the power of long-term infrastructure. They knew that markets run in cycles, and they possessed the absolute conviction that eventually the American economy would recover. So, rather than slowing down to save money, they accelerated. They pushed their crews to build faster than anyone in human history ever thought possible. Moving at a blistering pace of 4.5 floors per week, the masterpiece was finished in just 1 year and 45 days. They came in under budget and ahead of schedule. Against all odds, the Empire State Building was officially open for business. The opening ceremony was beautiful. The President of the United States even pressed a ceremonial button from Washington to turn on the building's lights. And then came the terrifying reality. Crickets. Nobody wanted to rent office space. The towering skyscraper, designed to comfortably hold over 10,000 workers, was virtually abandoned. It was a complete and utter financial catastrophe. The media mercilessly labeled it the empty state building. Try to imagine the psychological torture of holding an investment like that. Every single day you wake up, look out at the skyline, and see a 102-story monument to your own massive financial miscalculation. It was so embarrassing that management actually ordered workers to walk through the empty hallways at night and turn on the lights. They were literally burning electricity just to create the illusion to the public that there were actually businesses operating inside. So how did they survive? When you are holding a wildly expensive asset that is completely failing at its primary business model, how do you avoid total bankruptcy? The answer lies in one of the most critical, yet unglamorous concepts in investing: cash flow. Cash flow is simply the money moving into your business versus the money moving out. While the core business of leasing offices was a spectacular failure, the investors had built in a tiny, seemingly insignificant secondary feature: an observation deck. For a small fee, tourists could ride an elevator to the very top and look out over the city. It felt like a cheap novelty compared to a multi-million-dollar real estate empire. But that tiny, reliable trickle of tourist cash generated just enough revenue to cover the astronomical property taxes. It didn't make the investors rich, but it kept them alive. And in the world of long-term investing, survival is more than half the battle. If an asset can generate just enough cash flow to prevent you from being forced to sell during a market crash, you live to fight another day. But living to fight another day doesn't mean the pain magically stops. The 1930s dragged on, and the building remained stubbornly empty. Then, the outbreak of World War II threw the global economy into even more chaos. Still, the investors held on. They practiced a level of delayed gratification that is almost unthinkable in today's fast-paced world. Today, if a modern investor buys a stock and it drops for 3 months, they panic and sell. We obsessively track our portfolios by the minute on our phones. We demand instant returns, and we genuinely believe that waiting a year for a profit is a long time. These investors waited nearly 2 decades. And they didn't just wait through bad markets, they waited through absolute nightmares. On a foggy Saturday morning in 1945, a lost military bomber plane actually crashed directly into the side of the building, tearing a massive hole through the 79th floor. In finance, this is the ultimate example of a black swan event. A black swan is an incredibly rare, totally unpredictable disaster that completely breaks your financial models. You can try to predict inflation, and you can try to guess interest rates, but you cannot model a 10-ton bomber flying out of the fog into your investment. But even after the crash, they didn't sell. They cleaned up the wreckage, repaired the walls, and kept waiting. Finally, as the 1940s came to a close, the world fundamentally changed. The war ended, and the post-war economic boom roared to life. American corporations were suddenly expanding at a record pace, and they desperately needed massive headquarters. Almost overnight, that empty giant sitting in the middle of Manhattan wasn't a joke anymore. It was exactly what the market demanded. By 1950, the building was practically full. The gamble had finally worked. The cash poured in, the debts were managed, and the true value of the asset was unlocked. In 1951, exactly 20 years after it first opened its doors as a humiliating financial disaster, the Empire State Building was sold to a new ownership group for $51 million. At the time, it was the highest price ever paid for a single structure in human history. Today, it is valued in the billions. The greatest lesson here isn't just about New York real estate, it's about how we fundamentally view success, failure, and time. In investing, being early is often completely indistinguishable from being wrong. The market will eventually reward patience, but it charges a heavy, agonizing toll in uncertainty and fear along the way. Most people quit their investments far too early because they mistake a bad economic season for a bad asset. But if you have the conviction to hold a truly valuable asset and you can structure your finances to survive the bitter winters, the compounding returns of the spring will make you legendary. If you enjoy learning timeless investing lessons hidden inside history like this one, make sure to subscribe to the channel. Every single week, you'll discover another incredible story that changed the world of money, and you definitely won't want to miss what we uncover next. Now, I want to pass a question over to you. If you were one of those original investors in the 1930s, staring at an empty building and bleeding millions of dollars while the entire world laughed at you, honestly, how many years would you have endured the pain before cutting your losses? Or would you have had the unbreakable conviction to hold on for 2 decades? Let me know your honest answer down in the comments.